And welcome to the Business Spotlight. I'm Pat Dewar. We have a great show for you today. A lot of the viewers of this show are business owners. In fact, obviously the Business Spotlight, you would think that. And the thing that I want to really address today is it's the second half of the year, the last quarter, I guess, is really what it is. And there's a lot of concern for what reports need to be ready, what deadlines are coming up in dealing with the IRS or KGB or whatever you call those people, and hopefully they're not watching. But with that, I've got Jeff Pickering on again. Jeff has a master's in taxation. He is a jazz musician at night, and he does TV with me on occasion. So thank you so much, Jeff. Great to have you on my show again.
Thanks, Pat. It's a pleasure to be here, as usual.
I want to get right into some of the things that are due, coming, and that a business owner should be really concerned with.
Right. So let's put it in perspective. The average person pays about a third of their income in taxes. That's both federal, state, local, sales, whatever. Mm-hmm. You know, Tax Freedom Day happens for us in Texas sometime around the beginning of May. So a third of your working life is actually going to pay taxes. And if you are paying that much every year for something, you would want to try to get a discount.
I'm all in. I mean, just show me the discount and I'll move forward with that.
Right. So the unfortunate thing is that many people plan more for their vacation than they do for their taxes.
That's scary because, like you said, if you're working in almost 5 months or the end of the fifth month, just to pay Uncle Sam his due.
Yes, that's right. So beginning of the fifth month, and it's a lot of money. And you think business owners are lucky because they have the ability they have choices. They have the ability to change. Some individuals also have choices too. Some don't. So just in general, in tax planning, choices equals power and saving money.
Right.
So having set the stage there for what's at stake, this is the time of year for business owners to take a look and see what they can do and try to maximize their deductions, reduce their taxes. Taxes are so complex now that you really, I can tell you some ideas, but you really need to make an appointment and go through your particular situation. One of the big mistakes that business owners make is that if they're having a bad year, they assume they don't need to do any tax planning.
Oops.
That is wrong. Bad years are great for us because we look at those things as we look at losses like as money in the bank for taxes. And if you don't take advantage of your bad years as well as your good years, then you're leaving money on the table.
Well, as we move into this last quarter, I know that there are deadlines coming up.
Yes.
And then there are certain things that any business owner, and obviously we want to throw the disclaimer out there that if you're a business owner and you're listening to this is not CPA advice or tax advice, it's just good information for edutainment, so to speak. And if you really want to talk to Jeff, you should, because I do. He's my CPA. So I guess I want to throw the disclaimer out there.
Thank you. Yes. Watching a great program doesn't make you a client.
Right.
So coming in and paying for advice makes you a client.
Okay. So now that we've got all the legal jumbo out of her,
mm-hmm.
So what's coming up, and then what are some things that they should be looking at and moving towards, taking action on?
Right. So we have your immediate deadlines is we've got a third quarter estimated tax payment.
Mm-hmm.
That's coming up. So if you haven't made your estimated tax payments, you got to do that.
And what's the date on that?
That's September 15th.
Okay.
Okay. So you've got 2 more left in the year, and there are some tricks you can do in case you miss those. So, for instance, some of my business clients come in to me, and they come in December, which is kind of late, but still okay. We can do something about it. And what we do is we give them what's called a withholding paycheck. And when you do the withholding paycheck, it's as if you made the payments all throughout the year.
Nice.
Even if you made it in December. So that's one of the tricks we do in case you miss these dates. It's better, of course, to come in and make them on time and then be prepared to do some other strategies. What you need to do is you need to look at your books and understand that how the end of the year is going to turn out for you.
Right.
At this time of year, you have an idea of what it's going to be like, unless you're in a very strange business where you can't predict anything. But for most people, they know what the end of their year is going to look like, and we can go in and model their situation to what's going on in the current tax law.
So anything, I guess one of the things that we want to address today are looking at what are some of the tax changes that are coming, what are some of the new things that are already on the books that they should be looking at and paying attention to, and then even potential things that could come up. I mean, you got to admit, this is going to end up on YouTube, and so there's going to be a lot of information that'll change in time. So, one of the things you always want to make sure is that you recognize it's right. This is kind of time-dated material, but it should be good information. This is the Business Spotlight. I've got Jeff Pickering, a master's in taxation, on the show, and we'll be right back after our messages. And welcome back to the Business Spotlight. I'm Pat Dewar. My guest today is Jeff Pickering. He's a CPA in the Plano area. He has a master's in taxation. He is my CPA. I will just blatantly throw that out there. And I encourage you to listen in. If you're a business owner, you need to pay attention, because Jeff has some great information and tools, tips, and techniques to maybe save you a little bit of fuss from the IRS?
Yes, that's right, the hassle. And I'd like everybody to know that although the firm has my name, I do have other CPAs who are working for me, and some other accountants as well. And I've always attributed whatever my business is to my great staff. I'm really proud of them, and I couldn't have had, I couldn't ask for any better staff than the one I have.
I agree. You have an excellent staff. They take care of us every year. One of the things that's always important for business owners to look at during this time period is how do I reduce my payments, so to speak, to the IRS?
Right. So I can speak in general terms. What your general strategies are for the business. In business, what you want to do is you want to accelerate deductions and delay the income if you can. So whatever tricks you can do to accelerate deductions, and one of the most popular ones is to buy equipment at the end of the year or anything else that you're thinking of doing. Now, for some people, they'll be able to prepay some expenses.
Okay.
That's specific to the individual business, because some won't. The IRS has rules and lots of different ways to keep people from deducting things that would normally be deductible.
Right.
So, but if you can prepay stuff, that's usually a good way to do it. If you can extend your income, maybe that invoice is going to be due in January instead of December. That's a great way to do it. Taking a look around and investing in things that you would normally have invested in the first quarter, just take them in the last quarter.
So that'd be like things like training or just about any expense.
Training, marketing. I always love training. I'm glad you brought that up, because it's always an investment in yourself and your staff. To me, it's a wonderful write-off.
Okay. What about retirement type of things? I know you're not you don't do investments, but do you recommend that they? Yes.
So there are some very powerful retirement tools. My personal favorite for a small corporation, like a one or a two, like a husband and wife corporation,
right,
is the individual 401k.
Really?
Yes. So that
Why?
one, well, because you can get huge deductions for a small amount of wages. For instance, if you have $30,000 of wages, you can deduct 22,000 and put it in your 401k.
Really?
So yeah, it's huge.
Like, yeah, so people that are listening to this that may not have a corporation, they might want to, Now, is it incorporated or DBA? I mean, does it matter in that instance with the 401k?
It doesn't, the rules are slightly different from somebody who's a sole proprietor and somebody who's a corporation. They're kind of close, but they're not exactly right. So there's a little adjustment in there. I would say that for somebody that's just doing a DBA, they should really look seriously about the benefits of incorporating.
Very cool.
There's a lot of stuff my clients tell me. They get confused by going out on and reading blogs and what other people say, and unfortunately, all these blogs are turning the internet into one giant water cooler or a barbershop, where people just sit there and
and the information is always so accurate at the water.
That's right.
Water fountain.
Well, my barber says I can write off my right.
Well, I mean, obviously, getting good tax advice is key. But
Yeah.
the one thing that I see in that is that that's an enormous benefit.
Sure.
Is what I'm hearing. What else can they do?
Well, there is a deduction which right now I'm gonna say maybe has a 60% chance of making it before the end of the year, and that's 100% bonus depreciation, or 50% bonus. 100% was 2012. So 50% bonus depreciation is a little different than what we used to call, or what we call Section 179, which business owners, they usually hear this, Section 179. I don't like to talk about code sections, as you know, because for most people, it's just going to
Their eyes glaze over and
exactly.
they go, yeah.
But Section 179 is one that's very popular, and it's probably the only one that people actually remember. And what it is, it allows you to purchase something and deduct the whole thing in the year that you purchase, instead of over 5 years or 7 years or 15 years, which is the normal IRS rule.
Now, what's the something that you're thinking, like a truck or a piece of equipment?
Well, traditionally, the nice thing for people to do is to buy a truck.
Okay.
Or for bonus depreciation, it doesn't even have to be a truck. It could be a sedan or other things. Section 179 usually means that you have to buy a 6,000-pound vehicle.
Okay.
So you think SUV. I think the X5 is typically, I think they put extra weight on it just so it qualifies for the tax deduction.
Let me do this real quick. Folks, we're listening to Jeff Pickering. He has a master's in taxation. This is the Business Spotlight, and we'll be right back in just a few moments after we hear from our sponsors. Welcome back to the Business Spotlight. I have a great show going today with Jeff Pickering, a CPA in the Plano area, master's in taxation, and we're talking about ways to hopefully, if you're a business owner especially, or a professional that has to pay the IRS their due, which you live in the U.S., you do. So we're trying to save you some money, and I hope you get a lot of benefit out of this. Join us on our YouTube channel, which is at patrickdoer.tv, and then also connect with Jeff at PickeringCPA.com if you'd like to schedule an appointment with him to learn more. He is my CPA, and I love having him on my show. Thanks again. I want to get into, we were finishing up the schedule, what'd you call it?
I was talking about the Section 179 and how you can buy big stuff and deduct it all at once. which is one of the tax planning techniques you should be looking at.
Okay.
And you did, when you came back, you mentioned something about being in the U.S., and that reminded me of some big changes that are going on in the world. And for people that are, people that have money in Swiss bank accounts, that's no longer a secret place anymore.
Really?
Yes, that's no longer secret.
Now that's been like forever. They've
No,
had
that's
it's
right.
private, it's nobody else's business. You're saying that the Swiss banks have finally gone, here we are.
The Swiss banks are reporting U.S. persons who have bank accounts in them. And not just Switzerland, Isle of Man, Bermuda, all these other places that were tax havens, they're complying with a new law that's called FATCA. Okay, and it's not new. It's been since Obamacare passed, FATCA was there too. It just took us this long to get all the organizations and regulations and all that stuff, the infrastructure of it. So what's going to happen is anybody that has a bank account in a foreign country, that bank has to have procedures to identify U.S. account holders and then tell the IRS, hey, this guy has an account in a foreign bank. So
Wow.
I know, it's interesting. And you can actually go on to the irs.gov and you can put in a country, like I did yesterday. I put in Sweden, and it has about 4,500 banks that are reporting to the U.S. And it's going to be, if that's not 100%, it will be. Wow. So, so the world is getting much smaller for those folks.
I am just stunned. And the other thing about that, though, is that the number of people that are renouncing their U.S. citizenship is growing exponentially.
It is going up huge. They just raised the fee to $2,200. I think it was under $1,000, and I guess in hopes that people would not, renounce so much. But no, people are renouncing, and we can only assume that many of them are doing it for tax reasons.
Really?
Yeah.
And now, is this kind of full disclosure that these banks, is it worldwide or is it just with America?
Well, the way this law is structured, it's structured to be like a little network and with growing tentacles. So if you want access to the U.S. markets, which, U.S. and London are the two biggest, you got to comply with this law. And if you're a bank, any bank that you do business with also has to comply with the law. Otherwise, you're going to automatically withhold U.S. taxes, whether they're due or not.
Wow. Now, one of the things that I would love to just cover, I know this is a kind of a radical shift from international banking, but there are a lot of soldiers and a lot of professionals around the world.
Yes.
And don't they get some sort of tax benefit for being outside the U.S. or working outside the U.S.?
Yes, if they have foreign earned income, they get about $97,000 tax-free. It goes up every year. So that's great. They have to be working, for the most part, they have to be working a year.
So the thing that comes to mind is I have a friend that was over in Afghanistan serving as a consultant.
Right.
And he made a lot of money.
Mm-hmm. And that's what happens. These folks, I have some clients that do that too. They go over there, they make tons of money, they don't pay the taxes, they come back and then they buy a house for cash or something.
That's what they did too. It's like, okay, we want this toy and this paid off.
Yeah, you don't want to. Buying the toys is a tough thing. I think it's a great strategy if your family can do that. So one of the other things, Afghanistan, of course, doesn't have the tax yet, but if you're in another country that does, the U.S. has this deal that says, okay, you have to claim your worldwide income, but you can take a credit for any foreign taxes that you pay over there.
Oh. After the break, I want to get into that because one of the things that a lot of people, granted, the people that are watching this, some of them could be international, some of them could be, a lot of them are going to be U.S. citizens. And maybe it won't apply to everybody, but
Right.
I do want to try to make sure that we cover in the last segment of the show what else business owners and even some individuals could be doing, because there's a lot of individuals that watch the show too.
Oh, sure, yes.
you know, folks, today we're talking with Jeff Pickering. Jeff Pickering, you can get him, you can meet him or meet with him at PickeringCPA.com. I know they've been rolling his phone number, and I believe it's 972
378
5200.
5200. That's it.
You know, I've dialed it twice.
Yeah.
So with that, folks, the Business Spotlight is really about giving you great advice to help you be more successful in your business and hopefully in your life as well. We'll be right back. Welcome back to the Business Spotlight. I'm Pat Dewar. Today I've got Jeff Pickering, a CPA in the Plano area, with me, and he has a master's in taxation. He is a brilliant man. I have used his services for the last several years and couldn't endorse him more as somebody you ought to talk to. He's brilliant at what he does. We've done TV and radio and a bunch of other stuff too.
Yes.
Even Hangouts.
That's right, even Hangouts.
So this last segment, I know it's kind of the last chance to get out what else people can do. Individuals, business owners.
Okay.
What's the hot list there?
So just in general, for the business owners, this is your time to save money. You've got to be able to make history instead of reporting history.
I like that. That's pretty important.
We like to say that, yeah, because there's nothing as unsatisfying for a tax guy like me as to sit there and have somebody give me their stuff and I plug it in and, oh, here's your taxes. But you know, the proactive stuff can really save a lot of money. And as a business owner, you know that you should be doing this.
Right.
So I guess that's enough on that soapbox. Just, you know, see your tax person. If you don't have a tax person, we do taxes.
Yeah. Now the other thing though is that a lot of times you even do second opinions.
That's true.
And I know that many CPAs actually bring their taxes to you because
That's right.
It's great to have a covering.
That's right. I actually do the taxes for 7 CPAs. So
it's good.
Yeah, it's nice.
It's a little bit like, you know, doing your own brain surgery, I'm sure, if you do it yourself.
Yeah, they appreciate, you know, the overall, you know, viewpoint. I think that sometimes, you know, I have some level of creativity. You know, I'm a musician, and somehow that applies over to the tax area. So I sometimes can think of solutions that are not your typical standard CPA type solutions.
I don't doubt that. I know that, you know, I always consider you a bit of a oxymoron just because you're a paradox in action. You literally do the jazz, you do radio or TV, and then you also are a CPA, and a lot of CPAs tend to be kind of not they're risk averse is maybe the right way to say that. Mm-hmm. You're willing to step out and do some new and creative things, so I appreciate that about you.
Well, thank you. What I try to do is I try to match the tax advice I give to the risk profile of the client I have.
Very cool. Now, the individuals out there, they've got some time.
Yes.
What can they do? Well,
you know, this time of year, if you're an individual and you're employed by a company, this is the time to adjust your withholding if you haven't paid in enough. This is the time to take a look at your retirement plan contributions, and some companies allow a catch-up contribution.
Oh, nice.
You know, coming up, we'll have the time to change your flexible spending account. Excuse me. So you've got to change that. You've got to do that stuff ahead of time and commit to your flex spending accounts. It could be child care or medical. So those things are the things you can do, and you can do kind of the things that I was talking about with the business owners. If you do a bonus, you can kind of. I mean, if you talk to your boss, he probably won't be upset if he pays that bonus
off next time.
Yeah, that's right.
Nice. For a lot of us, it's like Christmas money, though, or something. It's that end of the year thing.
It really depends on what you're looking at. If you
What
have
about the Roth IRA? Is that something that they, again, I don't sell these things, so I can talk about them.
Yeah, we don't sell them either. We actually don't sell any financial products. We just do taxes and accounting and some audit. So, yeah, the Roth we love. And for a person that's having a low tax year, that's a good year to make a Roth conversion.
Oh, I see. And we've talked about that on other shows. And the reason, if I'm understanding you correctly, if they're having a low income year, they take the Roth conversion.
And it bumps up your income, but you still pay few taxes on that.
Because you're putting it back into a deferred investment, aren't you?
Yeah, exactly. And once you put that money in a Roth, you will never pay taxes on that again, ever.
That's the thing that a lot of people don't get with this stuff, is that it's all about when you pay taxes, early or late.
Yes.
So anytime you can make it a minimal.
I like to say that people with options come out ahead. So the Roth is definitely an option for you. And if you don't have one, you should.
Very cool. What should people do at this point? We got a little bit of time left in the show.
So if, my individual clients also do come and see me. So if you've got especially if you've got an event that is changing in your life, if you've got a change in job, if you've got a change in marriage, your marital situation, if you've got life is unpredictable. And when something comes in, come in and see your CPA and make sure that whatever's happening, it doesn't have a tax effect. And maybe the thing that is happening is actually going to have a good tax effect, and you have some time to take advantage of it.
Mm-hmm. I heard one of the big ones is that in a form of if dad dies and mom gets the money, but she dies 10 years later, there's a new basis or something?
Well, yeah, there's a stepped-up basis rule. So
yeah, we don't have a lot of time to go into it, but they should talk to you if something like that.
Exactly.
If a parent dies.
Anytime you get an inheritance, it's always a good idea to talk to your CPA, just to make sure that you're not going to be paying some
more
extra
than
taxes.
you have to.
Right.
Yeah. Well, I really do appreciate you doing the show again, Jeff. It's always great. If you're a business owner, if you're an individual, by all means, connect with Jeff at pickeringcpa.com or call him at the 972-378-5200 number. The Business Spotlight is about giving you tools, tips, and techniques for helping you grow your business or be more profitable every way we can. It's the Business Spotlight. We'll talk to you next time.